Good day, everyone. Thanks for joining us here in the chat. You tuned into the Crypto Flight Edition. Fellow compadre speaking. So a short video on Dogecoin. I just want to give you guys an update on our inverted dome formation pattern that appears to be invalid. So we're going to revisit that. And we also had a comment referring to a potential pattern that is developing here on the chart. So we're going to explore that as well. So welcome back, loyal family. If you're new here, we only go over price action. That's it. Thanks for understanding that. And let's go ahead and pull up the chart and see what we have here, shall we? All right. So today's June the 11th, 2021, and the current price of Dogecoin is going to be 30 cents, slightly negative, approximately 4.3% for the day. Okay. Welcome back, everyone. ASMR, interesting analysis. So here's the inverted dome, with the illusionary inverted dome formation pattern. Okay, so yeah, I thought it would be, this is the daily candles here. I thought it would be within this inverted dome formation, and it actually broke down a few days ago there. So we're going to have to revisit this, actually just start fresh. And we got a comment saying that, is there a head and shoulders pattern there, pardon me. And what they're talking about is, let me just kind of show you here. I see it, actually. I do see it there. Let's see if we can pull up the lines. So it would basically be, in terms of what I'm seeing, right? Maybe they are seeing something different. Left shoulder right here. Yeah, that's left shoulder. You got the head here. All right, it comes down. And then there's potentially the right shoulder, like right here. Something like that, I think they're talking about. So if this were the case, see if I can, okay, right there. So if this were the case, then this is a bearish pattern. Okay, so what needs to happen is, it appears that assuming that I have the neckline correct, it appears that the market has, it's already broken down. Let me actually erase. I just wanted to kind of show you this pattern. It is a bearish pattern. It's assuming that the sellers are ready to push the price to the downside. No need to panic. This simply means that you need to follow through with your strategy, the one that you came up with before you entered the market there, okay? And I'm also going to take a quick measurement, but let's erase that for now because I want to get like a really clean neckline. The neckline is, let me just kind of put it back there. So the neckline is going to be like this lower line down here. The way that you play them is you wait until the market actually breaks down below that neckline. If you caught that area there, you wait until it actually breaks down, like somewhere around here. But again, we're going to find the actual neckline here in a second. And then you place your entry there with an anticipation of moving the price to the downside. And of course, the way that you would measure the actual target is you take the, you actually measure the head, and then you measure the actual neckline, okay? And that's how you find the target. So we'll find the target here. I guess we could just kind of do that right now, assuming that it is breaking down, not saying it is just yet because I have to find that neckline here, right? So, oof, that puts the price pretty low. Looks like, what is that? Looks like it brings it in the negatives there. Okay, that's interesting. Yeah, it says negative 0.09. So, okay. So I'm not sure if it, because sometimes the head and shoulders patterns, maybe they don't always meet their technical target, but that is the technical target that I just measured on the chart there. But again, this is all speculation, guys. Let me pull up the actual neckline here live for you all to see if I can actually find a legitimate neckline. And what I do is I always focus on the candle's bodies, okay? I don't pay attention to the wicks. I do pay attention to the wicks in some cases, but in this case, I'm not paying attention to the wicks, only the candle's bodies. And the higher the time frame, the better when you're focusing on trend lines. And in this case, I'm finding that neckline. Okay, perfect. So that would be the technical neckline for me, like right around there, okay? All right, so somewhere right around there. Okay, so this would mean that it appears that the market is in the process of breaking down below the neckline on the current candle. Now, here's where it's important because I think that's a perfect neckline, by the way. I maybe not perfect, but it's a pretty accurately placed neckline because if you look at the clustered area here, these daily candles, the bodies are perfectly aligned there. You have these candles bodies aligned there. And right now it appears that the market is trying to break down below that neckline. Okay. So really simple. 20 hours to close on this candle. If you are actively following us, you know what we wait for. We wait for the close. Okay, and right now this is an active candle. There is 20 hours and 38 minutes to close on this candle. They typically open a new candle 8 p.m. Eastern time every single day on the crypto markets. Okay, so that's basically, the market needs to close below this neckline in order for it to actually be an official head and shoulders pattern. Keep in mind, when you break below a support level, the buyers do have, I wouldn't say one last opportunity, because sometimes you have some scenarios where the market would break down below a level. I'm not even talking about like a head and shoulders pattern in particular. I mean a support level, because although it is the neckline of a potential head and shoulders pattern, it is a support line. So I look at all support lines the same. Okay, when you break below a support line on the very next candle, the buyers will have the opportunity to make a bullish counter move and close back above the financial support line. Okay, whether it's a neckline or not. Okay, because this is it. This is speculation. It does look like a pretty well-defined head and shoulders pattern. I'm not gonna make it seem as if try to justify anything bullish. Okay, I'm just letting you guys know what is presented to me on the charts as of right here, right now. Okay, so 20 hours to close. If the market does not get back above the the 30 cent, maybe like 32 cents. What we really need to see is a bullish engulfing candle in order for the buyers to actually kind of turn things around here. So something like that. Let's just call it like 35 cents. If you see the market break down and then break back above, it's considered a fake out. Okay, I'm not saying that's what's going to happen. I'm just giving you guys all the scenarios. I've already measured the head from the neckline, and when it extends below zero, I'm letting you know that the market appears to be right below the neckline of the potential head and shoulders pattern that is in the process of completing right now. And I'm letting you know that there's potential for the market to actually close back above 32 cents minimum in order to protect a financial support line. Simple, really simple, really simple. But yeah, so that's basically all I have for you guys. This is the financial support line. If you guys still have that large range that we discussed in terms of the market being within like 23 cents up to 69 cents, I think I said. Yeah, like something like that. Whoops. Okay. So that would basically mean that the market is in an interesting position right now. I'll say that. Okay. So things could get interesting here, guys. You have to have a strategy. I can't stress that enough. Okay. So that will pretty much wrap up today's video. The market is potentially breaking down below a very bearish pattern. But of course, you have all the information you need to understand over the next 24 to 48 hours in order to assume that it is breaking down or if it's having a fake out at this time. Okay. So hopefully we give you guys a visit within the next 48 hours. But again, I just want to show you, this is the very large consolidation range, assuming that this is not a legitimate head and shoulders pattern, which again, I'm not justifying anything, guys. It does look like an official head and shoulders pattern. I have to be 100% honest with you guys. Okay. But if it isn't, it's just in a very large consolidation range. You guys know my stance on that correction video that we've already came out with, saying that Dogecoin could experience a substantial retracement. So you have everything, guys. I guess I covered all my bases, right? It could go up, it could go down. Some of the critics tell me all the time, right? So that's all I have. Let's give it 48 hours. 30 cents. Okay, that would be the crucial level. 35 cents would kind of be the savior level for here in the short term. 48, 72-hour prediction. Okay, this way you'll understand what's going on in terms of the fluctuations up or down. Okay, and that's it, guys. So hopefully you enjoyed that. Leave an appropriate thumb below the video if you enjoy the content. Leave a comment so that the YouTube algorithm can push this video out there to the Dogecoin investors army, so that everyone is on the same page in terms of the next 48, 72 hours. It's pretty interesting, pretty crucial. Okay. So also, if you're new, before you go, we covered the traditional stocks. If you're into that, we'd love for you to join us here on this interesting journey. So hit the subscribe button, hit the bell, and we'll send you that information when it's available. Once again, thanks for listening until the end. Huge support. Thank you for that. We'll talk soon. Execute your strategies. Okay. You're going to need it at this point. Okay. And Bye for now, guys.